Hi, Alessio, hope you're well. So I decided to make a video for you in my office today. As you can see, there's my green screen behind me. The green screen I've used a few times in my videos, I'm sure you've probably seen. So I said to myself, you know what, let's just do a normal, regular video, no green screens or things like that. So just an update for you on what's happening in the market. In fact, particularly on what's happening on gold, which is quite interesting. Now, as you can see here, by the way, guys, the reason I want to talk about gold is for a number of reasons. Obviously, gold just recently hit our targets at the all-time highs. So basically, over the last several weeks, I've been bullish on gold. In fact, ever since the consolidation pattern that formed on gold there, we've been saying that gold very likely could go further higher. Same with silver. And in fact, on both gold, silver, and actually also GDXJ, our junior gold mining stocks, we've already hit our targets on those. So my targets for gold were at the 1873 levels and also the 1900 levels near the all-time highs. Now, here's the bottom line, guys. I want to switch this chart now to a monthly chart, the long-term chart of gold. And there's something quite dangerous here. So we actually reached the all-time highs. Yeah, almost, just breaching that level. We haven't closed above the all-time highs though. I think we're getting there. On the monthly chart, we have not yet closed above it. Before I mention the warning signs about gold, I want to first of all just mention that from a sentiment perspective, it is a bit worrying because if I was gonna get long on gold, I would not be doing it right now because the sentiment is right now very bullish, over bullish. There's a great analyst and trader. I forget his name right now. I'll put it here on the screen so you can see it, but he has a rule which is that there are warning signs in the market whenever it's over bullish, overbought, but usually when markets are overbought, over bullish, that is often a warning sign for the market. Now, there are at the moment no divergences. There are no bearish divergences on gold. That's something I'll be keeping an eye on. But here's a warning sign for gold that you might want to pay attention to. According to a recent report, the smart money commercial hedgers, they're betting heavily for or in favor of the US dollar. In other words, the smart money are buying quite heavily the US dollar. The reason why that's potentially bad news for gold, as you can imagine, is because the US dollar and gold are often inversely correlated. Not always. So sometimes there's a decoupling and this correlation between gold and the US dollar, but generally, most of the time, gold and the US dollar are inversely correlated. Simply meaning that when gold goes up, usually the dollar goes down, okay? So in fact, that's been correct so far. Usually, in fact, recently this correlation has been correct. Gold has gone massively higher, whereas the dollar has dropped. Now, at this point, we need to be very careful and remember that in situations like this, again, sentiment becoming extreme now on gold and sentiment becoming extremely bearish on the dollar. We need to remember that the smart money eventually turns out to be correct. And because the smart money commercial hedgers are betting heavily for the US dollar, they're heavily buying the US dollar, that may end up being bad news for gold in potentially the next few months, and maybe by the end of the year. Because if they're betting heavily for the US dollar, if the smart money is buying heavily in the US dollar, that could mean that maybe not the short term, but at least in the next few months, in the medium term, there could be a major reversal in the price of gold. So I think even though in the short term, this momentum on gold may continue towards the 2000 levels. So I'm not betting against gold right now. I'm not saying gold's going to crash immediately just because the smart money is betting heavily against it. No, that's not what I'm saying. But statistically, because the smart money is betting heavily for the US dollar, if the US dollar reverses and goes up, as the smart money thinks it will, and usually the smart money ends up being correct, if the US dollar reverses and goes back up, and makes a major bullish reversal, which is probable, which is quite likely in the next few months, in the medium term, that could be bad news for gold because the inverse correlation. So personally for me right now, I would not want to jump in right now into the price of gold. Again, the time to be in gold was several weeks back when we were talking about it in the members video, as you saw in this video here. So right now, we've already hit our targets for gold and silver. Personally, professional traders at this point would be looking to take at least some partial profits, some partial profits along the way, or at least waiting for a pullback to the averages. So I think a pullback to the averages is becoming more likely. I don't think we've topped yet on gold. I think I don't think we've reached FOMO yet. I think we're about to reach FOMO, fear of missing out, as people are reading in the newspaper or the articles or on the web that gold is hitting all-time highs. I think we could see that kind of FOMO setting in, perhaps pushing this market, pushing the gold market above the monthly chart highs, above that monthly high of 2011. We could maybe move to 2000 levels, but I think eventually we're going to see some divergences, some bearish divergences, and maybe a reversal. Very likely, I think we could see a reversal, a major correction in the price of gold in the months to come. All right, guys. So for me personally, I still think in the short term, we might see further momentum, perhaps a pullback, and then a momentum pushing gold higher to test psychological resistance at 2000. That because of what's happening with the smart money betting in favor of the US dollar, that could bode badly for gold in the medium term, perhaps by the end of the year. So some caution here is required at the moment, given the over bullishness, over optimism, the overboughtness here in the price of gold. All right, guys, thank you very much for watching this video. I do appreciate it. Before I finish the video, I just want to ask you a huge favor, which is that my good friend Sara, she has a great channel, a fantastic YouTube channel on Hello Iran TV, which is on this link you're seeing here, youtube.com/Hello Iran TV. I would really appreciate it, guys, if you join her channel. Maybe just watch some of her recent videos. By the way, the last time I mentioned her channel, nearly 1,000 of you, just about 900 to 1,000 of you, joined her channel and subscribed. So I do want to thank all of you who've already subscribed to Sara's channel. Thank you very much, guys. I'm sure she'll appreciate it, and I appreciate it too. But guys, as a huge favor to me, I would kindly ask you to check out her channel on that link you see there, and just watch some of her videos and subscribe. You won't be disappointed. Her videos are fantastic. They're entertaining, they're informational and educational as well. And also sometimes very funny and hilarious too. So guys, please guys, if you can, subscribe to Sara's channel. Thank you very much indeed, and bye for now. Cheers, bye now.